Hi everyone. In today's class, we are going to be discussing a brand new topic, which is relevant costing for decision making, a very important topic in performance management, and it's also very practical, especially as as an accountant, as a management accountant. Your responsibility is to guide the management to support management in making managerial decisions. So the management accountant is the one endowed with requisite knowledge and experience, okay, to provide recommendation, advice, okay, expertise to the management in order to aid managerial decision. So for this purpose, what do you understand by relevant costs? Relevant costs are costs that are directly attributable to a particular course of action in making managerial decision. They are costs that will change as a result of the decision taken. So any cost that will be incurred, okay, any cost that will be incurred for the purpose of taking a particular course of action are relevant. So basically, there are three attributes of relevant costing. So for a cost to be relevant, these three qualities, these three attributes or determinants or factors must be present. One is future, incremental, then three, cash flow. Okay, what do you mean by future? Relevant costs are future costs. That is, they are costs that are futuristic in nature. Any cost that will be incurred in the future, they are relevant costs because any costs that have been incurred in the past, which is also known as sunk costs, are irrelevant to the decision that is to be taken. So the bottom line is that for any cost to be relevant, it must relate to the future. It must be a cost item that have not been incurred at all. Then the second one talk about incremental. Relevant costs are incremental cash flow. Okay, relevant costs are incremental cash flows. So incremental costs are costs that change between alternatives as a result of the decision taken. Say for example, you have in 2024, we also have 2025. Let's say the fixed cost incurred, okay, the fixed cost incurred in 2024 is 1,000. In 2025, the fixed cost has increased to 1,200. So what has changed? Okay, what has changed? The change between the two is 200. So 1,000 naira is not relevant. 1,200 is not relevant. What is relevant is the change, is the increment. So the increment between 2024 and 2025 is the change. That is the incremental cost. And that's why we are saying that incremental costs are costs that change between alternatives as a result of the decision taken. Okay, they represent increase or decrease, okay, that will occur as a direct consequence of the decision taken. All right, then what do you mean by cash flow? Okay, relevant costs are cash flows. They are projected estimate. There are estimated costs. Okay, it's not the cash flows. I mean, it's not a non-cash item. Non-cash item like depreciation, amortization, or provision are not cash flows. Those costs should be ignored in the determination of relevant costs. Okay, if in the question, for example, you are given depreciation, you are given amortization or provision, you should know that they are not related to cash. They are not cash item, so they are not cash flow. They should be ignored because for a cost to be relevant, it must relate to the future. It must be incremental and it must be a cash flow. All right. So these are the three attributes of relevant costs. Now, let's talk about some terminologies. Okay, let's talk about some terminologies in relation to relevant costing. Now, what do you understand by cost? Cost represents the actual amount of money required for the purchase of goods or of rendering services. Okay, so I'll take it again. Cost represents the actual amount of money required for the purchase of goods or to rent for the rendering of services. So cost represents the amount of actual or notional expenditure relating to a product, job, service, process, or activities. Okay, so that is basically what cost is all about. All right. Therefore, there are different kinds of costs. There are different types of costs. We have variable costs, there are fixed costs, there are mixed or semi-fixed costs. So we also have opportunity cost, avoidable, unavoidable costs, committed, uncommitted costs. All these costs you must know that, especially if you are preparing for professional exam of ICANN at skills level. All right, so you must know what all these cost item is all about. Therefore, what do you mean by variable cost? Variable costs are costs that vary according to the activity level. Any cost that will change, okay, in relation to activity level are variable costs. So the higher the number of units produced, all right, the higher the variable cost that will be incurred. However, the variable cost per unit is constant; it will not change. But provided the activity level changes, then the variable level the total variable cost will also change. What are the examples of variable cost? Remember when we did operating statements, I mentioned to you that variable costs are also known as direct costs or marginal costs. And under the marginal cost, we have direct material, direct expenses, direct variable overhead, direct labor, direct expenses, variable overhead, and then direct material. Those are the four elements that make up the variable cost of production. Okay, so whenever you see variable cost of production, they are relevant and should be considered. Okay, variable costs are relevant and should be considered. All right, the next item is fixed cost. Okay, the next item is fixed costs. The fixed costs are costs that have no sympathy for activity level. Fixed costs are costs that have no sympathy for activity level, which simply means that irrespective of the activity level, the fixed cost does not change. Okay, the fixed cost does not change in relation to the activity level. As a result, when you see a fixed cost in a question, it is not relevant except it is incremental, attributable, or specific to that particular course of action. All right, so that is fixed cost. All right, then what are the examples of fixed cost? Again, we have discussed it previously under operating statements. Okay, the examples of fixed cost include electricity, okay, maintenance costs, uh, heat, rate and heat, depreciation, staff salary, all right, insurance, rents, and a whole lot of kind of expenses that will be incurred that are fixed in nature. All right, any expenses that is not variable, that will not change as a result of the decision taking, that is fixed for a particular period, is what is called fixed cost. All right, then what do you understand by mixed cost? Mixed costs are costs that have the attributes, okay, of both fixed and variable costs. Any costs that have the attribute of fixed and variable cost is what is known as the mixed cost. Is either it is called mixed cost or semi-variable or semi-fixed cost or step cost. Examples include maintenance costs, electricity bill. All right, so in the maintenance cost, some of the maintenance costs could be variable, some of them will be fixed. The same thing applies to electricity. So we have fixed element of electricity bill, then we also have the variable element. All right, then what do you understand by sunk costs? Sunk costs are past costs. They are costs that have already been incurred. So they represent historical costs which have no future impact in making managerial decision. So fixed cost, sunk cost is irrelevant and should be ignored. Anywhere you see past costs, anywhere you see historical cost in a question, it is not relevant and should be ignored. What are the examples of sunk cost? One key example is market survey costs. Okay, when you are given market survey costs, development costs, or research and development costs, all these type of costs are irrelevant because they would have been incurred in the past, or the activity would have been conducted before the project will commence. Remember, we said that relevant costs are future costs. So when you talk about any expenses that have been incurred before the commencement of the project, they are irrelevant costs and should be ignored. All right. So examples. In a question, examiner can give to you general costs, apportioned costs, allocated costs, prorated costs. All these costs are examples. They are examples of sunk cost. So when you see them in a question, please ignore. All right. So the next item we are going to discuss is committed costs. What do you understand by committed costs? Committed costs are costs that are not avoidable. That is, irrespective of the decision that is to be taken, the company must pay, the company must incur the committed cost. For example, we have examples of committed costs is leases. All right, in lease agreements, so there will be a contract between the two parties. All right, so once, and whatever the dictate of the contract agreement will become binding on both parties. So whatever that happens in the future, whatever the company has agreed to pay in relation to the contract price, then that must be paid. All right. So irrespective of the future decision that is to be taken, it will not change anything. Therefore, and that's why we are saying that committed costs are a type of or a category of unavoidable costs. The company cannot avoid it. The company must pay it. So it must happen irrespective of whether you undertake a project or not. The company must pay it. So that's a committed cost. All right. Then what do you understand by avoidable cost? An avoidable cost is a cost that could be saved or avoided, all right, depending on whether or not a particular decision is taken. So avoidable cost is relevant, all right? When you see avoidable cost in a question, you should know that it's a relevant cash flow and you should consider it, okay? You have to take it. Then the next one is unavoidable cost, all right? Unavoidable cost. This unavoidable cost is a cost that will be incurred irrespective of the decision that is to be taken. Unavoidable cost is an irrelevant cost and should be ignored in making managerial decisions. So unavoidable cost is closely related to committed cost. All right, closely related to committed cost. Any cost that will not change as a result of the decision taken is irrelevant. Please ignore it. The next one is differential cost. Okay, differential cost is the amount by which a future cash flow could be higher or lower depending on the course of action that is to be taken. Hence, differential cost is a relevant cost and should be considered. So differential cost is just like additional cost, or you can say maybe it's an incremental cost, because what you are trying to do is to compare between two alternatives. Okay, just between two alternatives. So it could be higher or lower depending on the course of action that is to be taken. So yes, that is differential cost. Then lastly, we talk about opportunity cost. What do you understand by opportunity cost? And opportunity cost is very common as far as performance management is concerned, as far as the relevant costing is concerned. So what do you understand by opportunity cost? So opportunity cost is a benefit forgone as a result of undertaking a particular course of action. Okay, so it is the best alternative that is forgone in taking a decision. All right, so say for example, a company has a storage space in which that have been idle for a while, and nobody is coming to rent out the storage space, and the company wants to execute a project. In order to, once the project is completed, they are going to the project will be put in the storage space. The project will utilize the storage space. Therefore, a neighboring business is now willing to rent out the storage space. So because of the fact that the company wants to use the storage space for the project, the rental income that would have accrued to the company from the neighboring business, the company will not be able to receive it because of the project. That is an opportunity cost. Another way you can look at it is that, say for example, I'm a lecturer, right? I say I have a car. I can decide to drive my car to the center. I can also use the car for Uber service. So if I decide to drive my car to the center, that means the benefit that would have accrued to me through the Uber service, I'm going to forgo it. So I'm not going to be able to earn the revenue from the Uber service. Therefore, it's a lost revenue for me. So when I now want to determine the cost of my lecturing, so the cost, the revenue I've lost, the benefit I've lost through Uber service should be part of my lecturing. This is what is called opportunity cost. Therefore, when you see opportunity cost in a question, you have to account for it. Is a relevant cost. You have to account for it. All right then. So these are some of the terminologies you need to get familiar with. Please go through the material and understand them deeply, because in most cases, especially if you are preparing for ICANN exam, oftentimes examiner do test student knowledge in all these terminologies. Okay, so in a particular question, student may be asked to explain or discuss the following terms. All right, at times you may be awarded free or cheap 10 marks or 8 marks depending on the requirement. All right, so please ensure you understand them. Now, how do you determine shortcuts for shortcuts for material and labor? Because majorly, when you want to determine relevant costs, the focus will be on material as well as the labor. Therefore, how do you then determine relevant cost of labor and relevant cost of material? So let me show you the shortcut that you can carry out to determine relevant cost of labor. Majorly, there are three elements. Whenever you want to determine relevant cost of material, there are three elements that may be present in a question. However, what are those three elements? One is current purchase price. Number two, disposal value. Then number three, historical cost. So you must understand how to treat each of them when you see it in a question. It's not compulsory that you are going to have the three of them. It may be only one, it may be two. All right. But what is important is that you have to know how to treat them. Therefore, what do you mean by current purchase price? The current purchase price is also known as replacement cost. It represents the amount at which the item of material can be purchased currently in the market. You know, when you want to buy material, what do? You go to the market and buy. The amount at which that material is being bought in the market is what is known as replacement cost or current purchase price. Therefore, the current purchase price should be used if it can be ascertained that the material is in frequent use and will be replaced. Once you are told that the material is in regular use and will be replaced, then the current purchase price is a relevant cost that should be undertaken, that should be used. All right. So the current purchase price is a relevant cost that should be used. All right. Then the second one is disposal value. Disposal value is also known as scrap value, salvage value, trading value, net realizable value. It could be called any names. The bottom line is that you have the material in the warehouse and you want to dispose of the material. All right. So when you dispose of the material, you are going to earn cash inflow. You are going to earn a benefit from that disposal. So that amount that you are going to earn is what we call disposal value or trading value. Now, the disposal value is the amount at which the material held in store can be sold. All right. The amount at which the material held in store can be disposed of is what is known as the disposal value. Therefore, if in a question you are given disposal value, that disposal value will represent a saving to the organization if it can be ascertained that the material held in store is no longer needed or will not be used. All right. So the material held, because you've already purchased the material, you keep it in the warehouse. So if it can be ascertained that the material is no longer needed or will not be used, then the disposal value will represent a saving to the organization. But the challenge of students is that in most cases, examiner will tell you that this material will be disposed of at a cost. In fact, examiner can went as far as telling the student that this material is toxic. All that examiner is trying to do is to test your understanding. So when you dispose of the material, you are not disposing at a cost. Rather, you are going to earn benefit from that disposal. So disposal value is a saving to the organization. So if you are determining relevant cost, so the disposal value or the saving must be in brackets in order to reduce your total relevant cost. All right. So that is the treatment of disposal value. The last one is historical cost. The historical cost is also known as sunk cost, or that is past cost. It represents the actual cost incurred in purchasing the material held in store. You know, the original price, the original cost the company incurred in purchasing the item of material held in store is what is known as a historical cost. This cost has already been incurred previously, some years ago, or previously. In that case, the historical cost will represent the original amount spent to acquire the item of inventory held in store. So consistent with the principle of relevant costing, any sunk cost or historical cost of material should be ignored because it cannot affect the future decision that is to be taken. So any historical cost, any past cost, any sunk cost, and cannot have any impact on the future decision that is to be taken because the past cost is already gone. All right. So remember, relevant cash flow must relate to the future. Relevant costs must relate to the future. So when you see historical costs or sunk costs in a question, please ignore it is not relevant. So diagrammatically, all these three elements I just mentioned in the determination of relevant cost for material, I can also use diagram of pictorial representation to demonstrate for you so that you understand better. Now, what am I trying to say in this diagram? You have the material in the warehouse, okay? You have material. This material, you have it in stock. If you have the material in stock and you are told that the material is in frequent use and will be replaced, this material is in frequent use and will be replaced. Therefore, what is the relevant cost? The relevant cost of the material will be the current purchase price. I will take it again. You have this material in the warehouse or in store, and you are told that it's in frequent use and will be replaced. Then relevant cost will represent the replacement cost, that is the current purchase price. Even though you have the material in stock, but the material will not be used or will not be replaced. As a result, relevant cost will then be the opportunity cost arising from the disposal of the material because you already have this material in the store, but because of the fact that you are not using it again, it will not be replaced. If you don't use it again, then you are going to dispose it off. So once you dispose it, you are going to have a saving. All right, that's a disposal value that we discussed previously. Now, this same material, you can have the material may not be in stock. If you don't have the material in stock, what do? You go to the market and buy. The amount at which you are going to purchase it in the market is what is called current purchase price or replacement cost. So relevant cost is the current purchase price. Once you are told that the material is out of stock, then in that case, relevant cost is the current purchase price. So let's talk about how to determine relevant cost of labor, the diagrammatical representation of how to determine relevant cost of labor. But before we get to the diagram of determining relevant cost of labor, you must understand the elements. Okay, two things can happen as far as labor is concerned. You can have spare capacity or full capacity. There can be full capacity or idle capacity. Now, as far as full capacity is concerned, the employee on full capacity, they are generally the workers on a monthly salary. Okay, workers on a monthly salary, they work from 8 o'clock in the morning, for example, they close 4 p.m. in the evening, all right, 8 hours per day on a daily basis, Monday to Friday, then for the next 4 weeks, that's 1 month. So on a monthly basis, they earn their salary. And because the same salary they earn in January, February, March, April, and all of that. So that salary is fixed in nature, except after a year whereby the company will do some kind of appraisal of each of the employee, then the salary may be increased to a specific percentage. However, okay, from that increment, it will now begin, it will now fix again for the next period. So it is fixed in nature. So any employee on a monthly salary are the ones at full capacity. They are the one working at full capacity. Therefore, as a result, the salaries paid to workers are irrelevant and should be ignored. Okay. However, the only relevant cash flow that can arise, the only relevant cost that can arise through full capacity is the extra labor cost that the company will incur, because when you are working at full capacity, you don't have spare time. Okay, you don't have spare time to engage on any other thing. You work from 8 o'clock in the morning to 4 p.m. in the evening. If the company has a project or another to execute that require your time to do, there's no way you'll be able to do it because you're already working at full capacity, no idle time. So what the company needs to do is to engage additional labor that will come and do that will come and execute the order, or that will execute the project. Therefore, the additional cost the company will pay for labor is a relevant cost. All right, the additional cost the company will pay for labor is a relevant cost that the company must consider. Also, it is possible that if an employee, say for example a supervisor that is working at full capacity on a particular activity, and there is a project or another for the company to be able to execute, then you need the expertise of that supervisor, okay, to come and supervise the new project or order. So that means the supervisor will need to leave his current position to come and supervise the new project. As a result, the company will be losing contribution. So the cost of diverting resources from one position to another is also a relevant cost under full capacity. So that cost of diverting resources, because there will be low productivity if a manager or supervisor is not present at the current position as a result of the new project that the company wants to execute, the company will be losing productivity. That is contribution loss. So that amount of contribution loss is a relevant cost you must consider under full capacity. Remember, I mentioned two things under full capacity. Under the full capacity, there are generally employees on a monthly salary. So the salary paid to workers on a monthly basis is a fixed cost, is irrelevant when you want to determine relevant cost. However, under the full capacity, two things can happen. One is that because the current employees are already working at full capacity, the company may need to engage additional labor. So the cost of hiring additional labor is relevant. You must account for it. Then number two, if, of course, you cannot hire more labor, it is possible that you will need to divert resources from one position to another. Then the cost of diverting resources is a relevant cost that the company will need to consider, especially if it has to do with contribution loss. All right. So those are the things you need to take into consideration under full capacity. Then under spare capacity is also known as idle time. When an employee is not fully engaged, when an employee is not fully engaged or is not working at full capacity, maybe due to low volume of activities. You are supposed to work for 8 hours in a day, but currently employee is working at 5 hours. That means for 3 hours, employee is idle. So as a result of that, your idle time is 3 hours. So if the company now has a project or an order to be executed that need 2 hours of your time, it is your spare capacity of 3 hours. Out of your spare capacity of 3 hours, 2 hours will be used to execute the order. Therefore, when there is idle capacity, relevant cost of labor is equal to 0 because you are going to earn your salary at the end of the month. But because you are not fully engaged, because you are idle, you are not doing anything, therefore your spare capacity is what that will be used to execute the special order. As a result of that, the company will not pay you extra money or extra salary for executing the order. Anytime you are told in a question that there is idle capacity or idle time or spare time, it means relevant cost of labor is equal to 0. So let me show you the diagram that we are going to. All these things I've been talking about under labor. These are the diagram. Now, our focus is on labor, okay? We want to determine relevant cost of labor. Two things can happen to labor, like I mentioned. There can be spare capacity or full capacity. If there is spare capacity, relevant cost of labor is equal to 0. Anytime there is full spare capacity, relevant cost of labor is equal to 0. However, under the full capacity, two things can happen. The company can be able to hire more labor. It is also possible that the company cannot hire more labor. Where the company can hire more labor, relevant cost is equal to the extra cost of labor that the company will incur. Okay. Then where the company cannot hire more labor, two things can happen. So if the company cannot hire more labor, the company can either divert resources. We need to divert the resources, okay, to come and execute the order. As a result, there may be contribution loss. Okay, there may be contribution because there will be low productivity once you are diverting resources. All right. So these are the ways in which you can determine relevant cost of labor. So let me give you an exam tip. An exam tips that you need to take into consideration. All right, because most often time scenario will be different kinds of scenario can be painted in relation to relevant costing question, and then you must understand the principle. You must understand once you understand the principle, no matter how big is the question, you are going to arrive at the right answer. So the first exam tip that you need to understand is that when you are solving relevant costing question, focus should be shifted to the additional information. In most cases, the table given to you, there will be some numbers given to you in that table. Most of those numbers may be irrelevant, okay? Most of the numbers will be irrelevant because questions are generally solved through the additional information, because our intention is that when you are calculating relevant costs, we are saying that they are future cash flows. So you pay particular attention to the additional information. Then the second point that you need to take into consideration is that, of course, when you are required to cost a project or determine the minimum price to pay, okay, the minimum price to pay for another or for a project, examiner is simply asking you to calculate relevant cost. I will check that again. Whenever you are required to cost a project or determine the minimum price to pay for a project for another, then examiner is asking you to calculate relevant cost, okay, to calculate relevant cost. Now, the third one you need to take into consideration is that if you are told in a question that material or any other asset will be disposed of at a cost, or examiner can also say is that that material is toxic. All right, so any material disposed of is a saving to the organization. You are the one that will interpret it as a saving, so, or cash inflow. All right, so it is not a cost. Don't treat it as a cost. It has to be a saving. Any disposal value is a saving to the organization. That's the principle. It is not about what the examiner is telling you in the question. Certainly, examiner will not tell you it's a saving. Examiner will not tell you it's a cash inflow. Okay, so you are the one that will interpret it as a saving or a cash inflow, because when you dispose of the material, you already have the material, you've spent your money to purchase the material, you keep it in your warehouse. Maybe due to the fact that you don't need the material again, you now dispose it off. When you dispose it off, you are going to dispose of at a scrap. That scrap is a saving to the organization. That is the principle you must take into consideration. And the last point I need to mention of your exam tip is the fact that for you to be able to earn your full mark at any time, whenever you have question under relevant costing, you must state your assumption. You must state all the underlying assumption from your calculation. Because you must let the examiner understand your position, how you arrive at your numbers. if you are not asking the question, whether you are asked or not, you have to state your assumption. It is very important. And in most cases, the assumptions carries more mark than the calculation that you want to do. The assumptions will have more weight than the calculation that you have done. At times, the calculation may be just 3 marks, then assumption may be 7 marks. Okay, assumption may be 12 marks, calculation may be 8 marks, depending on how the question is being structured. And that's why it is important, whether you are asking a question or not, you have to state your assumption so that you don't lose valuable marks. Okay, so that's that. So these are all the explanation and the principles underlying relevant costing. The next thing we want to do now is to have illustration. Okay, let's have illustration. There are several illustrations in this material, past questions, big past questions. However, due to a limiting factor, let's see how many illustrations we can solve in this class today. All right, so let's start with illustration number 1. I want us to solve this illustration number 1 because of the fact that it has something to do with report writing, so that we use one stone to kill 2 birds. All right, let me change the color of my pen. Let me use red. No, let me use this. Okay. All right then. Ojuelegba Manufacturing Company PLC has approached you for some expert advice on Project X, a one-off order from overseas for which the company intends to tender. The costs associated with the project are given below. The following additional information is provided. You see, this is a past question. Remember what I told you. Any question under relevant costs must be solved through the additional information. All the cash flow, all the costs given to you in the table are mostly irrelevant. They are mostly irrelevant, except there is no other cost other than what you have in the table, because relevant cost questions are majorly solved through the additional information. Now, examiner is giving us additional information, so you have to pay particular attention to each scenario, bullet point by bullet point. All right, so bullet point number 1, material A is in stock and the above was the cost. There is now no other use for material A other than the above project within the factory, and it will cost 17,500 naira to dispose of. Examiner has told me that this material A of 40,000 naira is in inventory. There is now no other use for material A other than the project above. And then, of course, it will cost the company 17,500 naira to dispose of. This is called, that 17,500 is a saving to the organization. It's not a cost, rather it's a saving. Material B would have to be ordered at the cost shown above. Material B is 80,000 naira. Examiner has told us that it would have to be ordered. It means that material B is not available, it's not in stock. Therefore, we need to go and purchase it. It means that the 80,000 naira we have in the table is relevant. We have to account for it. Then we move to number 2. Direct cost of 60,000 naira relate to workers that will be transferred to this project from another project. Extra labor will need to be recruited to the other project at a cost of 70,000. So in this case, this direct labor cost of 60,000 is irrelevant, because this is direct labor cost of 60,000, whether you execute this project or not, you must pay the workers that earn the 60,000. However, examiner has told us that extra labor will need to be recruited to the other project at a cost of 70,000 naira. You are moving some workers from their current position to come and execute this order. Therefore, you are now you are now recruiting another workers. Okay, you are recruiting another labor to go and replace them where they are currently working. In that case, the relevant cost in this case will then be the replacement cost. Okay, it will be the cost of recruiting additional labor. Okay, cost of recruiting extra labor. So that 70,000 naira is relevant, 60,000 naira is irrelevant. Let's move to the next one. Supervision cost. has been charged to the project on the basis of 33 1/3 of labor cost and will be carried out by assisting staff with their normal duty, provided that the supervision cost is not going to change. Remember, supervision cost is a fixed cost and therefore irrelevant. So if the supervision cost is not going to change as a result of undertaking this project, then this 20,000 naira for supervision cost, the 20,000 naira of supervision cost is irrelevant. Examiner is just telling you that it's on the basis of 33 1/3 of labor, because the examiner has mentioned labor cost. An average student may think that it's relevant. It is not relevant. They are just telling you how they arrive at the 20,000 naira. You remember, labor cost is 60,000 naira. Supervision cost is 20,000 naira. 20,000 naira is 1/3 of 60,000. That's what the examiner is trying to explain to you. Therefore, the supervision cost is not relevant. I'll move to additional information number 5. In this note number 5, you are told that overheads have been charged to the project at the rate of 200% of direct labor. Okay, direct labor is 60,000. 200% of 60,000 is 120,000 naira. And that is the 120,000 naira you are seeing here for overhead. So if that is the case, that overheads of 120,000 naira is irrelevant or irrelevant? Certainly it is not relevant, because there are two types of overhead. We have variable overhead and fixed overhead. Only the variable overhead is relevant, the fixed overhead is irrelevant. So in this question, the examiner did not tell us which kinds of overhead is this one. Our assumption here is that this overhead is seen to be a general overhead. Therefore, we ignore it. It is not relevant. But if in the question we are given variable overhead, we are also given fixed overhead, the one that is relevant is the variable overhead. The fixed overhead is not relevant. So if examiner did not split the overhead into fixed or variable, then it is termed to be a general overhead, and the general overhead is irrelevant cost. The next item, note number 5, you are now told that the company is currently operating at a point above break-even point. If a company is currently operating at a point above break-even point, it means that the company is profitable, all right? Because break-even point is the point of no gain, no loss, where your total revenue equates the total cost. So if the company is currently operating at a point above break-even point, it means that the company is profitable. If a company is operating at a point below break-even point, it means that the company is making loss. So this is just an information purposes. This should guide you whenever you are preparing your report. Then number 6, information, is that you are told that the project will need the utilization of machinery that will have no other use of the company after the project has finished. Okay, the machinery will have to be purchased at a cost of 100,000 naira. So this 100,000 naira is an additional cost to the company, and then disposed of for 52,000 at the end of the project. Okay, so as a result of this project, you are going to buy a machinery that worth 100,000 naira. That 100,000 naira is relevant. Okay, that 100,000 naira is relevant. However, you are told that at the end of the project, and then the machinery will be disposed of at 52,500. 52,500 is a saving. Okay, this is a saving to the organization. Therefore, what then is the relevant cost for the machinery? Relevant cost will then be the difference between the cost of purchasing the machinery and the disposal value. That is 100,000 naira minus 52,500. That's 47,500. That 47,500 is the actual cost incurred on the machinery. Then in the last paragraph, you are now told that the company tells you that the overseas customer is prepared to pay up to a maximum of 300,000 naira for the project. This 300,000 naira is the contract price. That's the contract price. All right, 300,000 naira. And a competitor is prepared to accept the order at that price. Okay. He also informs you the minimum that he can charge is 400,000 naira, as the above shows 320,000 naira, and this does not take into consideration the cost of the machine and profit to be taken on the project. What this paragraph is telling us is that the overseas customer is willing to pay only 300,000 naira. However, the company wants to charge the customer 400,000 naira, and that even the 400,000 naira is not included the cost of the machinery of 100,000 naira. and the profit that is to be earned on this project, because the company is currently operating above break-even point. But knowing fully well that the the competitors of the company is willing and ready to accept the contract at 300,000 naira. So this information has nothing to do with our calculation, but when you are writing your report, you should mention them. Okay, you should mention the information you have there. So that is the question. You are now required to cost the project for the company, clearly stating how you have arrived at your figures and giving reasons for the exclusion of other figures. Whether examiner asks you or not, you are expected to state your assumption. Whether you are asked or not, you must state your assumptions. All right. Then number B, you have to write a report to the company stating whether the organization should tender for the project, stating the reasons why and the price, and bearing in mind that the competitor is prepared to undertake the project for 300,000 naira. So this is a 15 marks question. So what do you do in solving this question? The A part, there are two things you are going to do in A part. One is to determine the relevant cost. Then two, you have to state your assumptions, how you arrive at your numbers. Then the B part, you have to write a report. So let's solve the question. Okay. Now, in solving the question, remember I told you are going to start from the additional information, even though I've explained all you need to do. In the information Roma figure 1, okay, we have material A, we also have material B. For material A, there's a saving of 17,500 for the disposal of material A. That's the 17,500 you are seeing there. It's a saving because what we want to do is a cost. Examiner says you should cost the project. All right. So you want to determine relevant cost. As a result, if you have a saving is a cash inflow, but what the examiner wants you to do is to determine cost. Therefore, you have to put the saving in bracket to reduce the cost. That's why you are seeing, so this material A is a saving, all right, of 17,500. Then material B, you are told that material B is not in stock and will have to be ordered at the price shown above. Material B would have to be ordered at the cost shown above, and material B is 80,000 naira. Okay, the cost of material B is 80,000 naira. Therefore, that 80,000 naira is relevant. So you have to account for it. The next one is direct labor. Under the direct labor, which is information number 2, additional information number 2, we are told that direct labor cost of 60,000 naira relate to workers that will be transferred to this project from another project. That 60,000 naira is irrelevant because whether you execute this project or not, the company will incur the 60,000 naira for those workers. Extra labor will need to be recruited to the other project at a cost of 70,000 naira. The cost of hiring extra labor is relevant. That's an additional cost. So you have to account for that. That's why you are seeing this 60,000 naira there, extra direct labor cost. Then the next bullet point, which is bullet point number 3, supervision cost has been charged to the project on the basis of 33 1/3 of labor cost and will be carried out by existing staff with their normal duty. Since supervision will be carried out by the existing staff, it means that the supervision cost of 20,000 naira is irrelevant and should be ignored. So, number 4, overheads. We are told that overheads have been charged to the project at the rate of 200% on direct labor. Overhead, there are two types of overheads: variable overhead and fixed overhead. Only the variable overhead is relevant, the fixed overhead is irrelevant. So since examiner did not tell us the kind of overhead this one is, whether it is variable or fixed, we are not told. Therefore, it is assumed to be general overhead. So the amount of overhead of 120,000 naira you have in the table is irrelevant, you ignore it. Next item is number 5. So this number 5, there's no calculation there, no figure there. You are just told that the company is currently operating at a point above break-even point. The final line item, you are told that the project will need the utilization of machinery that will have no other use of the company after the project has finished. So we are told that the machinery will have to be purchased at a cost of 100,000. that 100,000 naira is relevant. However, after the completion of the project, the machine will be disposed of for 52,500. That 52,500 is a saving. Therefore, what is the actual cost of purchasing the machinery? 100,000 minus 52,500 is the actual cost. So the purchase cost is 100,000. Disposal value, which is a saving, is 52,500. The difference represents the 47,500 naira. That's a saving. So at this point, all I need to do is to determine my relevant cost. I just need to add up everything. When you add up 17,500 minus 17,500 plus 80,000 plus 70,000 plus 47,500. So this will give us 180,000 naira, which means that the contract price, which is 300,000 naira, then but the company will incur only 180,000 naira. And because of the fact that the company is currently operating above break-even point, it means that this project is profitable. All right, this project is profitable because the company is going to earn additional contribution or profit of 120,000 naira. That is the contract price minus the total relevant cost of 180. Contract price of 300,000 minus total relevant cost of 180. That's 120,000 naira. So this is not the end of the question number A, requirement number A. So you can see we have only done the calculation. You need to state your assumption. All those things that I've been talking about since. So this is the way I put it here for bullet point by bullet point. All the bullet points that you have there, the additional information, you must comment on them. In the first one, which is material, the cost of material A held in store of 40,000 naira is irrelevant because it's a sunk cost and therefore non-relevant. All right, it's not relevant and should be ignored. The only relevant cash flow associated with material A is the saving of 17,500 arising from the disposal value. Okay, then number two, labor. What's our assumption under labor? The direct labor cost of 60,000 naira relating to workers that will be transferred to the project from another project, which is irrelevant. Okay, it's not relevant. That 60,000 naira is irrelevant, and that's why we ignore it. This has been ignored because it will not change irrespective of whether the project is executed or not. The workers will be paid. The extra labor cost of 70,000 naira needed for recruiting additional staff is relevant. The 60,000 is not relevant. Only the 70,000 naira is relevant. Number three assumption is the supervision. The supervision cost of 20,000 naira is irrelevant and therefore ignored, since the work will be carried out by the assisting staff with their normal duties. Then number four, overheads. All right, overheads. The overhead cost of 120,000 naira is irrelevant. It is assumed to be general overhead since it is not segregated between variable and fixed overhead. That's our assumption. All right, that's our assumptions on overhead. Then the last one is machine utilization. The only relevant cash flows associated with machine utilization is the 47,500 naira, representing the difference between the purchase price of 100,000 naira and the disposal value of 52,500. When you do this, that is only when you'll be able to earn your full mark. All right. So whether you are asked or not, each time you solve question under relevant costing, it is important, it is expected that you are going to state your assumptions. All right. So the number B part of the question is asking us to write a report to the company stating whether the organization should tender for the project. Okay, stating whether the organization should tender for the project, including the reasons why and the price, and bearing in mind that the competitor is willing and ready to undertake the project for 300,000 naira. So you want to write a report. So you need to ask yourself, what kind of report? Is it a letter kind of report? Is it a memo kind of report? The nature of your report will depend on who is writing the letter and to whom are you writing the letter to. So if the person writing the report is an employee within the organization and you are writing the report to the management within the same organization, so in as much as the person that is writing the report and the person you are writing to is within the same organization, then you are going to write a memo is a memo, internal memorandum is what that you are going to write as your report. But if you are if you are an external person, maybe an external consultant writing to a company, that will be in form of a letter. All right. Okay. So when you are writing a memo, you have to, of course, you have to indicate the person that is writing the memo. In this case, the person that is endowed with requisite knowledge to write, to evaluate this project is the management accountant, because you have taken into consideration relevant costs. So you are the only one, it's only the management accountant that understands the principle of relevant costing. An engineer within an organization is not, it's not skillful to be able to do all of this. Then who are you writing the report to? You are writing the report to the management. Okay, the report is being written to the management, and then when you are writing your memo, there must be subject, just like you are writing an email. All right, so there must be a subject, and then whatever you put as the subject of your memo is what the examiner will mark for you. It could be anything. It could be analysis of project X. It could just be project X. It could be evaluation of project X, like you have it there. It could be anything, whatever you call it. What is important is that you have to indicate subjects when you are writing a memo. Then, of course, you also need to indicate the date of your memo. Your memo must be dated. All right. So just put any date, whatever date that you have, you are good to go. If you like, put a future date or past date. What is important is that just indicate a date in your memo. Then you now go to the body of the question. Before the body of the question, remember, in the question, in the first paragraph of this question, we are told that Ojuelegba Manufacturing Company PLC has approached you for some expert advice on Project X, which means that there is a proud discussion. All right. So there is a proud discussion. Therefore, when you are writing your report, you need to reference the initial discussion, and that's why you are seeing here that is, you are referring to the evaluation of the Project X. Now, when you are writing your memo, you have to make it very brief. Management does not have time to be reading voluminous reports. Just make it as brief, as concise as possible, direct, straight to the point, and your report must be very complete. All right, all the ingredients that are supposed to be there must be included, but don't make it too wordy. If you make your report too wordy, then management will lose interest. So it is important that you make it very simple, concise, and brief. Of course, like I said, it must be complete. Don't leave any stone unturned. All right, don't leave any vital information unincluded. So how do you start your report? We are going to start from introduction. Look at what I put there. Refer to our last discussion on the determination of financial and economic viability of Project X from the overseas customers. The project has been evaluated considering the principle of relevant costs for decision making. I've told the management that, okay, based on our last discussion on this project X, I have evaluated the project, taking into consideration the principle of relevant costing in making managerial decision. Right? I've told management that my proposal, my recommendation is based on the principle of relevant costing. But the management I'm writing to, they are not endowed on the meaning of relevant costing. I need to explain what is relevant costing, and that will take us to the next paragraph. For this purpose, relevant costs are costs that are directly attributable to a particular course of action in making managerial decision. They are costs that are specific to Project X. Okay, I've already told the examiner, the management that, okay, in making my recommendation, I've considered relevant costing principle, and I've told them the meaning of relevant costing, that there are costs that are directly attributable. Any costs that we incur purposely because of this Project X are the ones that are specific to Project X, and they are the ones that we have taken. The third paragraph says that, as shown in the calculation in A above, okay, our calculation shows 180,000 naira relevant cost that will be incurred. So the total relevant cost associated with Project X is 180,000 naira. Hence, the project should be accepted since the total relevant cost is below the contract price of 300,000 naira. As an expert, Management accountant is an expert embedded within the organization. I've evaluated this project, and then we discovered that, of course, the company will only incur 180,000 naira, and the customer is willing to pay 300,000 naira. That means there is a profit or contribution of 120,000 naira to be earned. That is 300,000 minus 180,000. Then I'll move to the next paragraph of my report. Our company is currently operating at a point above break-even point. Okay, our company is currently operating at a point above break-even point. You remember in the question, examiner mentioned that the company is currently operating at a point above break-even point, which means that the company is profitable. Okay, so I will continue. Therefore, the acceptance of the project will enable us to earn additional profit of 120,000 naira, that is 300,000 minus 180,000 naira, taking into consideration that our competitor is willing and ready to accept the project at the offering price of 300,000 naira. Finally, in conclusion, should you need further clarification, do not hesitate to contact me. Then you mention your name. If you have any designation, put it there. FCA, ACA, BRT, MBA, whatever your qualification, put it there, because you are an expert. As an expert, you need to demonstrate you need to show your designation for, of course, that's the essence of that. Then, of course, you can just mention management accountant. Then there is no need for you to sign your memo. Okay, when you're writing an exam, there is no need for you to sign your memo. However, in practice, you may sign. In fact, in practice, majorly we sign memo report, because it depend on the size of the organization and where you are sending the report to. It's, for example, for a multinational organization, all right, maybe the company has a subsidiary in Nigeria and the headquarters is in, say, in UK. So as a result, you are writing a report to the headquarters, you are writing a memo to the head office in UK. So as a result of that, there will be a preparer of the report, there will be a reviewer of the report, there will be endorser of the report in the local country, and each of them must sign, because to show that the report they've actually reviewed, so the report was prepared by the person, okay, endowed with the requisite knowledge. Then two, and that the higher authority in the subsidiary country has already reviewed and endorsed it. So each of them, each participant, all right, must sign it, so that by the time it gets to the head office, they already know that, oh, okay, relevant designated authorities have reviewed the report before it gets to them, and that's only when they can rely on the report. But if you just write a report, no signature, nothing, anybody can just put a PowerPoint and put some numbers there, design the word and anyhow they like, and it's not showing anything. It's not showing validity to the content of that information. It may even be a draft. It may even be a draft letter, a draft report. But once you have put your signature, it has confirmed the authenticity of that report. All right. So that is what you need to do, and that's end of the question. Okay. Let me see if I can have you one more illustration, and that will be all for today. Let me see if I can have you one more illustration. Okay, let's treat illustration number 2 quickly. Let me see illustration number 2, or let me see this illustration number 3. Okay, let's solve illustration number 3. That will be faster. Yeah. So let's solve this illustration number 3. Tompolo Nigeria Limited is an engineering company that specializes in building engines for grinding machines. One of the components for building these engines is sourced from Akpan Nigeria Limited, a company in the same group with Tompolo Nigeria Limited. Each component is being transferred to Tompolo, taking account of Akpan's opportunity cost of the component. The variable cost of Akpan is 280 naira per component. A prospective customer has approached Tompolo to submit a quotation for a contract to build a new engine. This is a new customer to Tompolo, but directors of Tompolo are keen on winning this contract as they believe that this may lead to more contracts in the future. As a result of this, they intend pricing the contract using relevant costs. Okay, this has caught my attention. So they want to price these contracts using relevant costs. The following cost data is given in respect of the contract. The production director of Tompolo is on annual salary equivalent to 15,000 naira per 8-hour day. All right. Then this 15,000 naira is irrelevant. It's on the annual salary equivalent to 15,000 naira per 8-hour day, irrespective whether it is on a monthly basis or annual basis. That 15,000 naira is irrelevant. You ignore it. So the cost of production director is irrelevant. You ignore. Then number 2, the material needed. The materials needed for the contract are bullet number 1, 110 square meters of material A. This material is normally being used by Tompolo and it has 200 square meters in stock. So you have 200 square meters in stock, but you need only 110 square meters. We are now told that these were bought at a cost of 120,000 naira per square meter. The 200 square meter you have in the warehouse or in stock are bought at 120 naira per square meter. That 120 naira is irrelevant because it's a past cost. These were okay. They have resale value of 105 per square meter and replacement cost is 125 naira per square meter. You can see in this question, examiner has given us historical cost. We have been given the resale value. We're also given the replacement cost. In the question that examiner did not tell us that the material will be disposed of, it is only when you are told that the material will be disposed of that you are going to calculate disposal value as a saving. But in this question, the resale value of 105 is irrelevant because we are not told that the material will be disposed of. The 120 naira per square meter is also irrelevant. It's a past cost. The only relevant cost is the replacement cost of 125 naira. Remember, replacement cost is the same thing as current purchase price. Therefore, for me to get the cost of the material, I will say 110,000 multiplied by 125 naira per square meter. That will give me the total cost of material A that I will consider. So examiner has told you that the material is normally being used. When the material is in frequent use and will be replaced, it means once you are given replacement cost, it means that the material will be replaced. Therefore, you are replacing the entire material, 110. Okay, so you are replacing the entire 110. So 110 multiplied by 125 naira. So you have your answer for that. Then bullet point number 2, 30 liters of material B. Okay, 30 liters of material B. This material must be purchased specially for this contract, and the minimum order quantity from the supplier is 40 liters at a cost of 90 naira per liter. All right, so this contract needs 30 liters of material B, and you are told that the minimum order quantity from the supplier is 40 liters. That means, and then that 40 liters at a cost of 90 naira per liter. So I need to multiply 40 liters multiplied by 90 naira will give me the total of material B, total cost of material B. Even though I need only 30, but you cannot get 30 from the supplier. The minimum you can get is 40 liters. Therefore, it will be 40 multiplied by 90. Tompolo has no use for this material after the contract is executed. That is, since you are buying 40 liters, but you need only 30. The extra 10, you are told that the company has no use for the material after the contract has been completed, so you cannot sell it. 60 components will be purchased from APAN at a purchase price of 500 naira per component. Therefore, 60 multiplied by 500 components is just like raw material, is just like material. This is a component that you are going to use for the contract. Therefore, 60 multiplied by 500, whatever you have. So you account for that. Okay, so that one is the cost of the components is relevant cash flow that you must consider. Then number 3, a total of 240 direct labor hours will be required The current wage rate for the grade of labor that we work on the contract is 110 naira per hour. Okay, Tompolo currently has 75 direct labor hours of spare capacity for this grade and are being paid under collective wages agreement. Okay, so in this case, the company needs 240 direct labor hours and the company has 75 direct labor hours. That means you don't need, it's not 24, it's not 240 you are going to use. So it is only because you have a spare capacity, that's a spare labor hour of 75. So 240 minus 75. So that will be 165. So 165 hours is what the company actually needs. Then at what price? Is it at 110 naira? Okay, so the 110 naira is meant for the company, is meant for the employees that are currently working or that are on current wage rates. All right. So however, examiner has told you that the additional hours required, additional hours is the 240, okay, minus the 75, which is equal to 165. 165 is the additional hours needed on this contract. So you are now told that the additional hours required will be sourced by either overtime at a cost of 140 naira per hour, that is 165 hours multiplied by 40. I will keep it on one side, or employment of temporary staff at a cost of 120 naira per hour. But these temporary staff, because they are not experienced, will require 10-hour supervision by assistant supervisor who would be paid overtime at a rate of 180 naira per hour for this contract. In this case, in this second bullet point under labor, two things you are going to do there. You are going to multiply the 165 hours that you need by 120 naira per hour. Then you are now told that because the employee that with this temporary staff are not experienced, so there will be need for a supervision. Okay, that will be for a supervision. Therefore, 10-hour supervision will be needed. So 10-hour multiplied by 180, whatever you have, then you add it to the cost of hiring temporary staff. So that will be the total. So I will now compare the total cost of the overtime, and then the lower of the total cost of the overtime and the temporary staff. Whichever one that is lower is one I will select. Then number 5 bullet point, number 5 additional information. You are told that 25 machine hours will be required. The machine to be used is already leased at a weekly lease rental of 6,000 naira. That 6,000 naira is irrelevant because it's a committed cost. Lease is a committed cost. So whether the company execute this project or not, that 6,000 naira will be incurred. Therefore, it is irrelevant. It has 40 hours per week capacity. The machine has sufficient available capacity to complete the contract. The variable cost of running the machine is 70 naira per hour. So only the variable cost is what the company will included in the contract. So which is 70 naira multiplied by 25 machine hours needed. All right, whatever it is relevant. Then lastly, number 5, the company's fixed overhead absorption rate is 200 naira per direct labor hour. Over any absorption, fixed overhead is not a relevant cost, so you have to ignore that. All right, that's not relevant. Then you are required to calculate the relevant cost of building the new machine and explain why you have included or excluded any cost in the calculation. 15 marks. All right, 15 marks. So let's solve the question. So the name of the company is Tompolo Nigeria Limited. Examiner is asking us to determine relevant cost, so you have to indicate that. Under material, for material A, how do you arrive at your number in material A? So I will then go back to the additional information for material A. So for this is information number 2. Additional information number 2 is where we have the material. So we have said that only the replacement cost of 125 naira is relevant. The resale value, the savings will not be, there is no saving in this material because examiner did not tell us that the material A will be disposed of. Since we are not told it will be disposed of, so there will be nothing like saving. But if you are told that the material will be disposed of, it means that the company will earn a saving through the disposal value. So the numbers that we are going to consider, which is the only relevant cost, is the material is the 110 square meter multiplied by, okay, let me do that, 110 multiplied by 125 naira per square meter. That's 13,750. So let's go and post 13,750. That's the number here. The next one is material B. Under material B, examiner has told you that the minimum that can be purchased is 19 liters. All right. So the company needs 30 liters of material B. However, the minimum that the company can purchase, the minimum order is 40 liters at 90 naira. Therefore, I would then say minimum of 40 multiplied by 90 naira. That's 3,600. So let's go and post it. 3,600. That's what you are seeing here. Then the next item, after the first bullet point, the second bullet, sorry, we are done with the second bullet. Still on that second bullet point, we are now told that 60 components will be purchased from Akpan at a purchase price of 500 naira per square meter. So components say will be purchased is a future cost. Therefore, I will say 60 multiplied by 500 naira. That's equal to 300,000 naira. Sorry, 30,000 naira. So that's the 30,000 you are seeing here. So the next item after this is information number 3, additional information number 3. We are told that a total of 240 direct labor hours will be required. Okay, the current wage rate of the grade of labor that will work on the contract is 110 naira per hour. That 110 naira per hour is irrelevant because whether you execute this project or not, the company must pay it. Tompolo currently has 75 direct labor hours of spare capacity for this grade. It means that out of the 240, so you only need 165 hours because the 75 is idle time. So you don't pay the direct labor cost for where there is spare capacity or idle capacity is equal to 0. So the cost of this 75 hours of idle time is irrelevant. So we only consider 165 hours. All right. So the examiner is now telling you that the additional hours, that is this 165, that which is the addition that will be needed, will be sourced by either overtime cost of 140 naira per hour or employment of temporary staff. Okay, so I will then multiply 165 hours by 140. What do you get? Overtime 165. First thing first, let me confirm the difference. 240 minus 75 equal, that's 165, then multiply by 140, that's overtime cost. Overtime cost is 23,100. So let's go and post. We are comparing the overtime. So 23,100 is the overtime. I will close it. Then I will now do the temporary staff. So the second option is that employment of temporary staff at a cost of 120 naira per hour. Therefore, I would then say 165 hour multiplied by 120 naira equal to, that's 19,800. So I will go and put it there. Here is the 19,800. You are now told that because the temporary staff is inexperienced, okay, the temporary staff is inexperienced, then we are now told that the job will require 10-hour supervision by the assistant supervisor at a cost of 180 naira per hour. Therefore, I would then say 10-hour multiplied by 180 naira. That will give us 1,800. So it's an additional cost. So I will now add it to the supervision, to the temporary staff. So the total we require is 21,600. So you are selecting the additional labor. You are selecting the lower of overtime of 23,100 or 21,600. Since 21,600 is lower, that's why we select the 21,600. Okay. Then finally, in the requirement number 4, you are told that the matching hours will be 25 matching hours will be required. The machine to be used is already leased at a weekly lease rental of 6,000. That 6,000 naira is a committed cost and therefore irrelevant. It has a 40 hours per week capacity. The machine has sufficient available capacity to complete the contract. Okay. The variable cost of running the machine is 70 naira per hour. Therefore, I will say 25 hours that I need multiplied by 70 naira equal, that's 1,750. 1,750 is the relevant cost of the machine utilization. So I will go and post it. 1,750, that's what we have here. Then the final bullet point, okay, we are told that the company's fixed overhead absorption rate is 200 naira per direct labor hour. Any overhead assumption is irrelevant, okay? It's not a cash flow, it's not a future cash flow, just ignore it, all right? It's a form of a historical cost. Ignore, you are apportioning it, okay? So that's that. So I need to calculate what's the total relevant cost. When you add up everything together, 13,750 plus 3,650 plus 30,000 naira plus 21,600 plus 1,750, that will produce 70,700. So this 70,700 is the total relevant cost. You are not going to earn your full mark, even though in the question the examiner is asking you to state your assumption. So it is important for you to state your assumption. Therefore, I will then say assumption. The calculation above is based on the following assumption. Number one, production director's salary of 15,000 naira per day is irrelevant and therefore ignored. This is premised on the fact that the production director's salary will be paid irrespective of whether the contract is executed or not. The company must pay it. Then number two, material. What's our assumptions on material? The original cost of material A of 120 naira per square meter is not relevant and therefore ignored. Also, the resale value of 105 per square meter for the 200 square meter head in stock will not be accounted for. Since we are not told it will be sold, it is only when you are told that the material head in stock will be disposed of, that's only when you consider saving. But in this case, since we are not told otherwise, we ignore it. However, only the replacement cost of 125 naira per square meter for the required 110 square meters is included in the contract. So that's our assumption on material A. Then for material B, though 30 liters of material B are needed for the contract, but the minimum order quantity the supplier is willing to sell is 40 liters, meaning that therefore the 40 liters at 90 naira per liter has been included in the contract. Then the final assumption under that requirement number 2 is the component. So the component cost of 500 naira per component is relevant, all right? Total component cost is 30,000 naira for the 60 components will be incurred on the contract, okay? Total component cost of 30,000 naira for the 60 components will be incurred on the contract, all right? Then the next item would be labor cost. What's our assumption on labor cost? The total direct labor cost of 240 hours is needed on the contract, and the company currently has spare capacity of 75 direct labor hours. The relevant labor hour on the contract is 165, that is 240 minus 75 hours. However, the lower of overtime cost of 23,100 and additional staff cost of 61,600 has been attributed to the contract. All right, so we selected 21,600 as the direct labor cost. Then number 4 assumption is the machine utilization. The weekly leased rental of 6,000 naira is irrelevant and not included because it is a committed cost. Only the variable overhead of 70 naira per hour for the 25 machine hours required on the contract is included, okay? Then finally, fixed overhead. The company's fixed overhead absorption rate of 200 naira per direct labor hour is not relevant and therefore ignore. That's end of the question, okay? That's end of the question. So you can go through the material. There are other valuable big illustrations that you can practice. There are also solutions in the material as well, simplified form. All right, so you can try this illustration number 4. This illustration number 4 has been tested twice by ICANN. Okay, it has been tested twice by ICANN, and so you can just go through the illustration, a very big question for that matter. It was, I think it was 40 marks. All right, it was 40 marks when the question was initially tested, 40 marks. Okay, then you also have other illustrations there that you can practice. Okay, other illustration that you can practice. For example, this illustration number 5 was tested in May 2022. Okay, so you can go through it. Yeah, you can go through it. They are big, and then look at what I was telling you the other time. Okay, so examiner is saying you should explain all these concepts. All right, explain them one by one, and then you can see 5 marks, say bonus marks that you can quickly hand and pocket it. All right, so that is the question. I think there are more illustrations. Let me check. There are more illustrations. Yes, this other one too was tested in November 2022, compulsory, 30 marks. All right, 30 marks. All right, so that's for you to know the importance of relevant costing when you are preparing for ICANN professional exams. All right, because it is practical. It is practical. So you just go through all of them to gain more, to gain more insight into how to calculate relevant costs for a project or another. And the beauty of this is that when we get to short-term decisions, especially under when you are asked to calculate, when you are solving question for acceptance or rejection of a special order. So generally under short-term decision, you're expected to apply the techniques of marginal costing and the principle of relevant costing. All right, so when we get there, I'll be explaining to you in details. So that will be the end of today's class. Thank you guys. Bye-bye.